This past week has definitely been a volatile one in the US markets for sure. Can we expect to see this continue into next week? In this video, we're going to be looking at broad market conditions, some of your favorite stocks, including SOFI, Palantir, Hims and Hers, NVDA, and probably many more. We're going to be looking at whether or not the market still looks overvalued. Spoiler alert, it definitely does. And if this decline will continue heading into next week. The S&P is down roughly 1.5% so far this week, and it doesn't help when we see news articles like labour market pessimism hits higher since 2009 as Americans sour on economic outlook. Let's see what this video here has to say.
UMich sentiment falling to 57. The estimate 57.9, so not too much of a drop there. Interesting to look at the one-year inflation expectations continuing to tick up, hitting 5%, and then the 10-year inflation expectations, 5 to 10-year, hitting 4.1%. That is above the estimate, which was 3.9%. Again, expected change in median prices. We saw this last month as well, hitting a record high, the highest level since February of 1993. So inflation expectations continuing to the move to the upside. Lou, I'm so curious what you think about this, because we've been talking about the soft data versus the hard data.
Yeah.
This is another example of the consumer vibes just not being so great.
Yeah, the sentiment has soured like spoiled milk very quickly, right? I mean, in the last 3 months, and you're seeing it across the board. I mean, it doesn't matter which sentiment reading you look at, whether it's on the just consumer side or on the investor side.
Yeah.
I think we have to see it show up in the hard data first. I mean, Torsten Slok out of Apollo had a note out earlier today. Like, the expectation is with all this soft data weakening, you'd see it somewhere in the hard data, but we just haven't yet. I mean, the only indication we've gotten is in layoffs, but that could just be a volatility spike in, kind of beginning of the year reset in staffing. Until we see a real problem in the hard data, I don't think there's any concerns or expectation of recession, which everyone seems to be freaking out about. I mean, I think they think it's much closer than it is, but the data doesn't bear that out. So again, as an investor, I get excited when everyone gets negative, because it usually means stock prices are coming down. They're terrible market timing. If you look at the conference board sentiment, the expectations for stock prices plummeted the most in 3 months since November of 2022. That was a bottom. That was a time to buy. So I get excited at these times when everyone else is starting to get worried.
And where does that excitement leave you? Where are you finding the most opportunity right now?
Yeah, so it's funny. I've broadened out. I'm a tech guy by nature, but also I'm not going to ignore value. And Europe and China has now been showing value, right? Like, even though the Mag 7 came down from, call it a peak of like 38 times forward earnings down to like 25, 26. It's hard to say no to Europe at 14, 15 times earnings, or Alibaba at 14, 15 times earnings. So branching out, I'll be the first to admit I don't have an edge in international markets with individual stocks most times. So I'll go the ETF route there.
Yeah.
And then looking in the US is really, what are the companies that are delivering earnings growth consistently, quarter in, quarter out, and raising guidance? Because we know fundamentally whatever's going on in the market in the world, as long as companies keep growing earnings, growing sales, and raising guidance, their stock price will eventually keep moving higher.
Yeah.
So that means getting out of a lot of the momentum trades, right? Like, it's that phase of this bull market has ended where you could just set it, forget it, buy the Mag 7, buy whatever sector's rallying, and hope that you're going to make double-digit gains.
So with all of that in mind, when we also look at the Schiller's PE ratio, we're seeing very similar results to 2022 when we had that broad market correction. So we could just be at the beginning of it right now. So potentially this could be very justified, and we could expect to see this carry on. And of course, with him mentioning European and Asian markets, it's very interesting to see these actually also on a bit of a rally, as the FTSE is up, well, at its peak from the start of 2025, almost 9%, being at 8.25. Obviously, it's fallen off since then, but it's interesting to see that the UK ETFs are actually doing quite well, despite UK sentiment also being quite bad, especially with the current state of government affairs of cutting budgets to fund other things and all the controversy surrounding that. It's just something that is very interesting. But let's get back to the American economy, because this isn't a European economy video. But again, I think this sell-off could be very justified. And if you do actually have cash on the side, I think you should see this as a net positive. If you've been holding your positions for a long time, obviously you're still doing fine. But if you bought in around, since the recent hype, if you're a new investor of the election hype, then you might be seeing your portfolios turn negative at this point, and you might be getting a bit worried. But I think the only advice I can say is if you're in this game for a long time, then the best thing to do is always hold, because time in the market beats timing the market, of course. But if you do have spare cash to be putting into a position, dollar cost averaging into here is always going to do you absolutely fine. So for single stocks, these are some of the best performers from last week. I'll let you have a look at there. Obviously, we have seen a lot of selling pressure here, but on the breakout indicator, we can see that these are currently on my system some of the best. This is not financial advice. Obviously, these are just stocks in which could potentially have breakouts, but you need to look into them deeper to see where exactly they lie. Celsius has had a very interesting week. We will get onto that later on in this video. And O'Reilly Automotive seems to have done okay as well, with Celsius looking as if it's falling off quite significantly today, which is Friday. But before we get on to any of those stocks, let's just quickly have a look at Tesla here. Now, Tesla has done actually really well this week. I think it's just a bit of a reversal as people try and take a bit of profit. People are obviously getting into Tesla as it's looking to be undervalued, but when you actually really know what you're looking at with Tesla, it's something that does not look undervalued at all. I mean, I've always been a bit of a Tesla bear, so I might be biased, but at a PE of 130 nearly, that's just ridiculous. That's not something in which I can say you should be buying Tesla right now. Yes, they might have a really good futuristic outlook, especially with the robo-taxi and the weird robot thing which they're bringing out. Yes, but I feel like at 128 PE, that has been priced into the market 20 odd years ago. You know, I mean, obviously that's an exaggeration, but I just think that Tesla has just been overvalued forever, and I do think it will continue to be overvalued forever. It is just one of them companies. I don't want to be too negative on Tesla, but I do think we should expect to see this stock continue to fall, especially with people basically smashing up Teslas, which is just out of order. That is not on at all. But again, it's had a very good week, although it is starting to fall back off now. They are, of course, in a short position on the daily chart MACD indicator, and on the moving averages, they are below all of them, except from the 20-day exponential moving average, in which they are currently tickling. Celsius has had quite a good week. As of recently, it is up quite significantly, and it has actually beaten when it came out of its earnings report back in February. It is now, well, it peaked at $35, but in my opinion, it's looking as if this stock is now overvalued. It did recently acquire another competitive drink called, I believe it was called Alini Nu, which is a women's health orientated drink, which confuses me because I didn't think drinks could be targeted at male or female. Just a bit weird to me. But here we can see that they are currently at a PE of 74. When we look on my system to see where my intrinsic value is set for them, I have this currently set when I can find it. I have this currently set at a high of $32 and a low of 18. So obviously we've surpassed that high now. On a discounted free cash flow analysis, we are actually set at only $7 for this year's growth. So it does look to be as if Celsius is overvalued. However, that analysis was done over a month ago and obviously doesn't account for the Alini Nu acquisition, which will obviously drive up sales. Furthermore, with Celsius now, they are in European markets. I have spotted them in my local Tesco's, which for my American viewers is like a Target for us. So that is positive news for Celsius. They are actually now making moves into our markets. But will they be as successful in European markets as they have been in American? I think so. I do think they will do quite well, but I'm not entirely sure. Only time will have to tell with that. I think we might see a selling pressure in Celsius next week. I can't really imagine it going too much further than this, but I could be totally wrong. It does have the momentum behind it currently, with it being above all of the exponential moving averages except from the 200-day. I think if it did manage to get above the 200-day moving average, it would push it further up, of course, but it seems to have hit that 200-day moving average as a bit of resistance, which is not ideal, which shows that it's kind of scared to go a bit higher, and I do think we should expect to see a bit of selling pressure in Celsius early next week. But again, it's kind of just a broad market sentiment with stocks at the moment. It's not really a single issue. It's more what people are thinking, market broad, you know. That doesn't really make sense, but you know what I mean. Okay, so SOFI is a stock in which continues to break my heart. I actually have SOFI's valuation to be ridiculously high, which you might think is like weirdly biased or whatever, but it's not. It's just what the numbers giving me. I haven't got a discounted free cash flow analysis for SOFI because their free cash flow is volatile as hell, and I don't think it's actually positive, which is obviously a big downfall for SOFI stock for saying the company was founded in 2011. But here we can see the intrinsic value on the bullish side, even though it says bearish up there, is at 118, and on the low side bearish is at 90. This giving us a mean of 104, putting this in at a buy with a current PE of 28. This was done well over a month ago, so this will need to be updated soon. But I still think this stock is massively undervalued. But of course, when competitors like Robinhood are announcing that they now are moving into the banking sphere, it's always going to hurt stocks like SOFI. But Robinhood is actually down nearly 6% on the week, so it actually hasn't even done them much good. But I think intrinsically it will take a toll on SOFI just because Robinhood is such a well-renowned name within the world of finance and fintech, so it will obviously drive customers towards them and away from SOFI, which hurts my heart because I am a bit of a SOFI fanboy, but that's life. One stock in which has actually seen some buying pressure last week was AMD. I mean, this has fallen straight back down now, so sorry for you AMD holders. I have been quite bearish on AMD for quite a while now, and I do still think it is overvalued. However, I do think that this stock should actually start to go up soon, and I think it might be a good buy once this market sentiment issue is finished. Basically, when that will be, I'm not entirely sure, but we can see here that it's really not done too well on a 6-month chart, and the current PE ratio is at 103, and they have an earnings per share of 1. I can imagine AMD will get to a PE ratio of around 70 to 80 before people start wanting to buy back into this company. Obviously, they are a very good company, but I think they were overhyped. People really expected them to do as well as NVIDIA, and they just didn't ever have that level of development and technology to really push them in that direction. But it is a brilliant company nonetheless, and after this massive sell-off, we could potentially see some buying pressure early next week, but I do kind of doubt it. We are below all of the moving averages now, and looking on the MACD indicator, we barely narrowly just avoided opening up into a long position here on the day chart, which is actually really positive, but obviously barely narrowly avoiding it is just as useful as avoiding it in general, so it doesn't really change anything. So NVIDIA is a stock in which has done pretty bad as well. All of these Mag 7 stocks have done pretty awful over the last couple of days. It is negative, any short position in the on the MACD indicator, and on the moving averages it will be the exact same story. There you go. So again, something in which I imagine will just continue to take the brunt of this fall. However, I do actually think NVIDIA at this price is a brilliant buy, especially long term. It currently has a PE of 37, and if you're buying NVIDIA at 37 PE, I mean, what can really go wrong there? I mean, it is an amazing company with a market cap of $2.6 trillion. One stock in which I am absolutely in love with at the moment at this current price is Google. I mean, look how much they have sold off since their peak, and I thought it was relatively fairly valued here. And now it just looks massively undervalued to me. I mean, when we look at Google's PE ratio, I think it's below 20 now. 19.2, which is just ridiculous for Google. I mean, you're really buying the future with Google. In my opinion, it's probably one of the best companies, if not the best company in the world, to be honest. Their profit margins are insane. They are future-proofed with quantum. They obviously do their own AI. They literally do everything, and they even pay a little dividend as well, which is nice. But I think that we will end up hitting this support here with Google. We might actually even end up going further, which is just outrageous. But I only own a small position in Google at the moment, and I do think I'm going to buy quite heavily into Google when I think the time is best, and I don't think that is right now. I think this still has time to fall, but like I said earlier on in the video, time in the markets beats timing the market. So if you're really long term, then who really cares? At the end of the day, just buy because this is an amazing company, but I'm not a financial advisor. And quickly looking at HIMS, this has fallen massively and it could potentially hit this support here, if not go a bit further. It did actually have a pretty decent start to the week, but since then it's fallen quite massively. I don't actually think HIMS is overvalued at all anymore. I think this is actually quite a good position for HIMS to be in. It is at a 54 PE, so I do expect this to continue to fall down, but I think for growth long term, HIMS is actually a really good company. Looking at Super Micro Computer, here we can see that this has obviously had a massive sell-off. I feel like I am a broken record in this video because everything's had a massive sell-off. I think this will continue to sell off because it is one of them companies in which people do struggle to trust. But on the exponential moving averages, these are all obviously above where the current price is, hoping to push this further down. And what is the current PE for Supermicro? It's normally very low from memory. Yeah, it's at 14.97, which for a company like Supermicro is actually a really good position to be buying this stock. But again, people are often quite hesitant to invest into this company. So that concludes this video. This light is really bright. It makes me look super, super white. There we go. I think that was a bit better, but I hope this video has been useful for you. I'm not a financial advisor. None of this is financial advice. If you have enjoyed this video, please do leave a like and subscribe. It would be greatly appreciated. But to conclude, I'm really not sure what happened next week. So if you clicked on this video looking for an answer, nobody's got the answer. I'm very sorry. But hey ho, we'll see what will happen next week. It could be good, it could be bad, but probably bad.